Hi, this is Rebecca with the Cat and Rebecca Show, Keep It Real Estate. And I'm with Brian Kavanagh, the Franklin Loan Center. And we kind of want to talk about credit scores, a FICO, Credit Karma.
Okay.
How do all those play an impact on a lender? Or actually, the loaner?
The lender, yes. All right, credit scores. We typically, every time that we do a loan, we will run 3 bureaus or repositories, okay? You're like, what is bureau? Well, bureau would be like Equifax, TransUnion, and Experian. Those are the 3 big bureaus that are out there. And we will pull a credit report or a merged credit report from all 3 of those. And you're like, why do you do that? Well, we do that because Joe Bob Automobile may only be reporting to one of these bureaus and not all 3. So we always pull all 3 to make sure we cover everything so we don't miss anything.
My experience is most lenders do pull from all 3, so this is not something
correct,
that's
but
just
some
specific.
banks, they only need one.
Okay.
They'll just pull TransUnion, Experian, okay? So we do pull all 3 and most lenders do pull all 3.
Okay.
It's good to do that. Now each one of those bureaus will come up with its own credit score based off of your history of paying credit that's reported to them. And that can be based off of whatever little credit you have to years and years and years of credit. And it'll be on if I've ever made a late payment, have I ever been paid things off, which is good. Have I taken out all of this extra loans? Have I gotten inquiries on my credit over the last year to show that I'm trying to get a loan? Okay. Do I have collections? Do I have judgments? It shows all of that. Do I have a foreclosure? God forbid. It will show all of that that's reporting to those bureaus. And each credit bureau or repository has its own algorithm as to figure out what that score would be based off of your good credit, your good payments, the amount of loans you have, the amount of available credit you have to what you've already borrowed against, what I've already paid off, if I've got collections, if I've got judgments, everything under the sun. They're going to weigh you out and they're going to give you their own score. And all 3 credit bureaus or repositories, they can have 3 different scores. You can have a 690, a 710, and a 780. Scores can range anywhere from 350 up to 850 or 900, depending on the bureau that's there. Now we pull mortgage credit reports, okay? And sometimes they differ than what the consumer might get on their consumer report. I hear all the time, Credit Karma says I got 950. I'm like, well, Credit Karma's not loaning you a house, first of all, and they don't do a mortgage credit report. Our credit scores for mortgages are typically lower than that. Not all the time, but typically they are. I just had a client just the other day. It's like, I got 680 credit scores. Karma says I have it. And I pulled his credit yesterday and it was 642. So now I got to call him and let him know 642.
And then he's mad at you because he thinks you've somehow done something and yet you have no control over what these scores are.
We have zero control. Zero control.
And now how do these scores impact a loan?
Well, your scores, when we see these scores, it gives us an idea of your credit history. And it kind of gives us a playing level to play with. Okay, it's like, all right, he's got really good scores, medium scores, and whatnot. So that kind of, and it gives our investors or whoever we're doing the loan with, including the automated underwriting system, it gives them an idea of where you need to be as well or where you're going to be at. We still have to verify all the rest of the information that comes along with a loan, income, credit, so forth. But this is going to help out.
Bless you.
Excuse me. One thing that credit scores do is they do affect rate. They affect not the actual rate that you get, but the cost of doing that rate. If you have low credit scores, there might be a cost associated with getting that rate. And we have to go ahead and build that in, or the investor that we're selling it to is building it in. If you have really high credit scores, the cost of that rate is going to be much less. So credit scores do affect rate. Not dramatically, but they're going to affect rate, and it could swing it as much as, gosh, sometimes 0.5% on the actual rate.
I know this might not be the question you were thinking I might ask, but the next thing would be, since it does affect a rate, is there some place a consumer can go other than a credit repair bureau to increase those rates or follow the Credit Karma? Is there any, or is it pretty much just pay your bills and
They can use Credit Karma and those little score reporting agencies as a guideline to make sure their scores are moving forward. Okay. But those are not pulling an actual credit report. They're just monitoring what's going on in their system. Okay. When we pull a credit report, it actually shows us an inquiry on there that you're looking to purchase something.
Okay.
So it is more of a hard pull and we see everything. Whereas those other consumer things, it's just like, oh, look, based on everything that's going on, my score is improving or decreasing. That'll give them an idea if their score is improving or decreasing.
So if somebody sees their score improving and they come back to you like that particular client and says, okay, I'm not maybe not there, and they see it improving on their Credit Karma, will that reflect equally on you when you do that hard pull?
It will be in an upward motion. I'm not going to say it's going to be equally point for point.
Not point for point, but it does at
but
least
it'll
give
show,
them a guide.
Correct, and that will give them a guide that, hey, my credit is moving forward. I need to maintain that.
Okay, so your scores are really important when getting a loan, and we will have a interview with a specialist who does credit repair, so that will be on a separate time. But at the moment, this is Brian Kavanagh and Rebecca with Keep It Real Estate.